So welcome to today's webinar event. My name is Sean Kozak. I am the founder of NeuroStreet. And what we're going to do in this webinar today is we're going to talk about automated frequency ratios. It's a very unique concept. It's a very interesting topic, and it's a very efficient way to trade the financial markets done correctly and having a process. And one of the reasons why I like to discuss these webinars on the weekend is because I like to go through deep dive examples with actual strategy frameworks that actually can give you the keys to the compass, so to speak, right? Like when I do these webinars, I normally like to reserve the weekend events for topics that allow me to really spend some time going into the details of how you can leverage this to actual trade right away. And hopefully by the end of this event, what we've done here is we'll be able to provide you with a solution that gives you an opportunity to look to trade using ratio software. A couple things we're going to cover here in the event. It is being recorded. If you have questions, please type them in the chat box. If you need anything, or if you need anything at all, just type them in. And if I don't get to it right away, I will. I'm not ignoring you. I'm just staying on topic. And if you have to leave, not to worry, we'll send the information out at the end of the event, because I can assure you there's lots to cover. And most people normally like to watch these webinars at least twice just to kind of learn the concepts and get a good feel for it. Good morning, Steve. Hope you're feeling better. So before I go any further, has anybody ever heard of frequencies? Anybody ever heard of frequency ratios before? Some of you might know it as harmonics. But we'll explain the reason why we call them frequencies, mainly just because it's to do with Fibonacci ratios, and we'll get in touch with that in just a moment. So looking forward to it. Guys, I need to cover a quick disclaimer here. The main objective is mathematics. This is a very mathematical way of trading. If you like math, if you like science, A plus B equals C, 1 plus 2 equals 3, that type of thing. This is exactly going to be an event for you. Okay. So can't give you any guarantees of financial performance. Risks in the business is there. We all know that past performance never guarantees future results. And I'm not here to give you any advice, right? If you take a trade, fantastic, but it's not my responsibility, right? That being said, it's important to understand and embrace the risks in trading so that you have a good feel for it, right? It is a business of risk management. So we're going to go over a lot. Got a lot to cover, so I'm going to be fast, be quick, be nimble, be swift and sound with the tongue, and that way you guys can, be in and out and enjoy the rest of your weekend. Because if you're like me, I like to take a little bit of downtime from the screens, and if we can leave here with a jam-packed presentation, that'll be just that. We're going to go over frequencies. We're going to talk about the scanners. The scanners are very, very important because it's really about the scanners, to be honest with you. When you look at frequency trading, you want to be able to find the opportunity. And that's what's really, really, really nice about this way of trading, is that it allows you to be able to scan global markets. We're going to talk about that. Multi-time frame application. I want to talk about math-based automation. We're going to go into the ratios so you understand exactly what they are and why we need software to do this, because ultimately you can't go into this type of an event thinking that we can do it ourselves. I think that's the most important part. This is an event that we actually can't do ourselves. So when you look at why we'd want to use software, this is the reason. There's things that we can do as traders, and there's things we can't do. And this is something that we actually can't do. Mathematically, it's next to impossible to do it. So we need to rely on tools to help us, right? We're going to go over the plans. We're going to go over confirmed trades. We're going to talk about how to optimize the best trades versus the, A plus trades versus B plus trades. We're going to talk about the chat rooms. We're going to talk about testimonials. I want to talk a little bit about an offer that I think is going to be too hard to refuse. So if you guys are looking for a deal, you come to the right place. This is going to blow your mind. So if you're somebody in here that's looking for an opportunity to really save a few dollars, you come to the right place. We've got a promotion running right now that's going to rock your socks, so to speak. Who likes deals? Who likes Black Friday? Everybody like Black Friday? Well, what if you had like Black Friday times 10? Would you like that? I know I would. If I could go buy 10 TVs, I would. Not that I need one, but you can kind of get the gist. So I just like to break it up a little humor, guys. I started at 5 a.m. this morning on a Saturday, so you can kind of go with that. A couple cups of coffee, we're all set. So at the end of the event, we'll spend some time with some questions if you like it, and we're good to go. As you know, my name is Sean. For those of you who've never been to an event with me, I normally like to have these Saturday events a little more laxed, I guess. It's Saturday, right? And I'm not here to give any fluff or snake oil. No false hopes, guys. I got no time for that. There's too much in this business going on, too much false promises. Trading is a business of risk, guys. End of story. You got to get good. You need to learn the tools. You need to practice. You need to study, and you need to get really good at the business. After this event, you'll have a reason to do it because we've got a lot to cover, and this is going to give you the tools to do it if you like what we're about to cover here. So if you have any questions for me or my team, we have an open door policy. Shoot us an email, send us a text, send us a call, whatever you need to do. We're here to help you. You are the reason we are here. So your success is our success. That's all we care about. And, hopefully we can get you there. Right. And that's the plan, right? Everybody's got a journey in this business, but the sooner we can get you there, the better. So how many of you guys can see clearly that? Trick question? I don't know. How many of you guys can make sense of that image? This is kind of maybe in an art museum, and you're asking, is there some hidden symbol in there we're looking for, right? Is there some pattern we're trying to see? You ever see those pictures where you got to look for the hidden image? If you just stand close enough, you stand back enough, you can see it. This is what it would be like if we were trying to do automated frequency calculations ourselves as a human being. How many of you guys can make sense of that information? I can't, and I'm pretty darn good at this. Right? This is why you need an algorithm. This is why you need an algorithm to do this. This is why I lead with this slide, because it's not some hocus pocus approach here. Like, if we were trying to do what the computers are doing in the back end, this is what it would look like. And it would drive you nuts. I can't trade like that. I don't think anybody else could, nor would we want to. But this is the reason why we're talking about this. Okay. So what I want to do is I want to give you a better way. And it's really simple. It's a really, really simple way to do things. Okay. What we're going to do is we're going to talk about scanning. Okay. Scanning is about identifying the markets that are in play based off mathematics. So we're going to go into what math-based automation is, but really what you're seeing here is scanners that are scanning the market for mathematical Fibonacci ratios. Okay. And we never know when they're going to happen because the market's doing different types of structure analysis all the time. The market's going to move differently every single day. This is why it's so powerful, because there's never one single day that will ever be the same ever again. And so what happens is the market creates runs and retracements, impulses and corrections all the time. And these create mathematical measurements, Fibonacci measurements, extensions, retracements, etc. And so what our software is doing is it's looking, and we can set the software up on any time frame, on any bar type. So if you want to trade range bars, Renko bars, minute charts, tick charts, volume charts, you can do it. And it's going to you can scan whatever time frame you want. 1 minute, 5 minute, 15 minute, 30 range chart, 5,000 volume chart, whatever you want. We can set the ratios up that way you want it. And you can do this for day trading, swing trading, scalping, investing, whatever the case may be. It's not dependent on you as a trader. It's dependent on how you want to drive it. So in order for me to kind of do justice and share how to trade this and what this is and all of that stuff, I want to talk a little bit about what math-based automation is. And Thomas is asking, will this be available on TradeStation? It's coming, my friend. It's definitely coming. So definitely going to be there soon. Absolutely. Math-based automation is about taking automated ratios. Okay. Automated ratios are about automating it. Like, there's no way we can do it as an individual. And so we need to automate the process so that we can identify how we want to trade off the mathematics. Now, there's two types of ratios. There's continuation ratios, and then there's reversal ratios. And inside of those ratios, there's buy patterns and sell patterns. Now, this is where it gets pretty hardcore, because this is really just where it gets hardcore. Like I love this event so much because what it's doing is so powerful. Let me show you the ratios. These are the continuation ratios. So essentially what a continuation ratio is, measurements in the market. Now, some of you might know these as crabs and butterflies and all that fancy terms and jargon. To me, I don't really look at it in that context. That's marketing and that's branding. That was given a name. It's Fibonacci, guys. It's all fibs. It's all mathematics. That's why we call it frequency ratios, because we're measuring mathematical ratios in the market. It has nothing to do with a name. It has to do with the math. And I'm a math guy, right? So if we look at this, we kind of take this pattern for a second. It all starts with X. So if I have an X as my base, it's got to give an impulse. It's got to have a deep enough correction to pull back to B. It's got to give a lower high, and then C to D has to go all the way down and has to project here. But what it's doing is it's measuring this to this. It's making sure that it pulls back a certain amount. It's making sure that that correction is a certain distance from that high, and then it has to overshoot that low by a certain amount. Like, it's all mathematics. Like the impulse has to be a certain distance. The correction has to be a certain distance. It has to be all relative to the math. So that's what's really different about this, is that there's different types of ratios. Like, this is one pattern based off the mathematics of that pattern. This is the second pattern. The difference between the two is the difference between the highs. The width of the highs is different. The depth of the wings are different. So it's all different geometry, right? When you build a business or build a building, excuse me, and you build a skyscraper or a bridge or a, you know, everything has angles and math and stress points and stuff. So, you know, some of these are really deep corrections. Some of these are shallow corrections. Some of them are really large impulses. Some of them are really small impulses, right? So what we're doing is we're just taking different measurements of Fibonacci sequences, ABC ratio sequences in the market, and we're measuring the depth of the math. Does everybody understand that? Now, can you imagine having to draw that manually and get it right? And then at the same time, do it 4 different ways on 4 different patterns. And then try to do that on multiple time frames on multiple markets and know when it's happening on a market you're not even looking at. What if you're looking at crude oil and there's an amazing opportunity on the Swiss dollar? What if you're looking at the S&P and you're like, oh, wow, I should be looking at the spiders? What if you're looking at, you know, the NASDAQ and you're like, oh, Jesus, the pound dollar is setting up really, really nicely right now? You don't even know what's happening, and you don't even know which ratio is happening, because it's all different. And that's what's really powerful with this. We do continuation ratios and we also do reversal ratios. So not only is there continuation ratios, there's reversals. It's a completely additional set of ratios. So what's happening is you're not only getting continuation trades, you're getting reversals. So there's 4 continuations and there's 4 reversals. So that's 8 trades. 8 trades times a long and a short. You know, that's 8 longs and 8 shorts. That's 16 different patterns you'd have to memorize. And how do you draw it? Like, to me, it's phenomenal that we were able to actually automate this to the point where we can run the scanners. But if you're like me, my answer is, well, okay, well, how can I trade this? You guys understand that? Like, how many of you guys think you could draw that accurately and do that over multiple time frames, multiple markets, and get them all right? Can you guys, yes or no? It's real simple. Anybody here think they can do it? If anybody says yes, man, I swear to God. I don't think so. Not a shot, not even close. Okay, not even close. So this is where you're like, if you're like me, it's like, okay, well, there's no way in hell I'm going to draw 16 different mathematical sequences and ratios and do that across 12 different markets on 5 different time frames. And if I'm swing trading this chart and I want to day trade that chart, like, no, like, it's not possible. Physically, mentally, it's just not possible. So what I've done is I've built a step-by-step system to do this. And I want to teach it to you. I want to show it to you so you understand it. So step 1 is very simple. Okay. And by the end of this event, the end of this event, you will have a game plan to just come out the gate swinging with this. Okay, that's the objective. So you're going to scan for potential trades. Now, you're not going to do that. The software is going to do that. And you can set it up for scalping, day trading, swing trading. So before you trade, you need to answer these. You need to find the trades. So let the software find them for you. You'll define the time frame. You'll define the direction, which will help you assess the probability so that we can move into trade management. So what I'm going to do is I'm going to teach you how to pick through the noise in not taking every single trade, but taking the best ones. And it has a lot to do with direction. And I'm going to show you how to really stack the chips in your favor, right? Because we all know we can take every single trade that software produces, but how do you really take the golden goose that lays the egg, right? And do it on a regular basis across like 10 different markets. That's what I'm looking for, is I'm looking for the best trades. And if the scanner's finding them right away, you can quickly qualify them, which is what I'm going to do, is I'm going to show you how to qualify the trade setups, okay? So the scanners are going to find the trades. Okay, the scanners are going to find the trades. You're going to be able to choose which time frame. Maybe you don't want a day trade. Maybe you want a swing trade. That's fine. I'm going to show you a workspace for both. And then we're going to move into the pattern. Okay, how many of you guys can think that if we can give you the scanners, it's easy to see? Like right now, I can, if I was looking at this scan, I would be able to say, okay, on the 2-minute chart, I've got a pattern, a buy pattern. If I was looking at the NASDAQ, okay, or if I was looking at gold on the 5-minute chart, I have a pattern. I've got it all over here, but let's say I was trading on the 5-minute. Okay, perfect. And if I was trading on the 5-minute time frame, then there's only 2 trade opportunities, on gold here and on gold there. Okay. If I'm, let's say I'm an S&P trader, is there a trade on the S&P? Nope, not right now. There's not. If I was a Euro Swiss franc trader, is there a trade? Yep, right here. 1 minute. But that doesn't necessarily mean like what we normally would encourage you to do is say, okay, pick your markets, pick your time frames. So you define your time frame, define your market, and then let the software do its job. Let the software do its job. Okay. So this is where it gets fun, because now what we're going to do is we need to identify the pattern. Identifying the pattern is done automatically. You have nothing to do as an individual trader. You need to let the software do its work. Let it do the heavy lifting. This is not a human thing. This is an algorithm thing. The software is going to find the trades in the scanners. The software is going to put the patterns on your chart. It's going to tell you what pattern it is. It's going to tell you everything. It's going to tell you if it's a buy trade or if it's a sell trade, and it's going to tell you exactly the ratio that it is. It's going to tell you if it's a reversal or if it's a continuation. It's going to tell you what type of reversal or what type of continuation it is. Okay. And then that's it. You say, well, what do you mean that's it? Well, then what's next? Trade it. We take the trade. Everything we do is automated. Everything in this software plots the entry location, the stop loss location, and the targets. And you want to know why? Because every pattern is different, which means every trade plan is based off the math. Now, this is the ingenious part of it. If you've got a really big ratio, you're going to have a really big trade plan. If you have a really small ratio, you're going to have a really small trading plan, because it's all based off the size of the measurements. It's all based off the size of the run versus the retracement versus the expansion, the correction, because it's all mathematically driven. So the scanner finds the trades. So let's kind of recap this. The scanner finds the trades. We identify the pattern and the reversal, and if it's a buy or a sell. We identify the trading plan so we know exactly where the entry, the stop, and the target is. It's plug and play. It's systematic. If you're having a hard time with discipline, this is going to help you. Okay. And then we execute. Now, here's the fun part. I'm going to show you how, like, the different type of patterns that there are. Like, take a look at this one here. This is a ratio pattern. I'll show you where the entry is. There's the base of it. It completes here to here to here. It gives you the buy setup here. Okay. Stop loss goes here, T1, T2. Okay. Let's kind of go down the next one. Here's a different example. Big ratio. You notice how the plan is a little bit different. It's a really big ratio right here. Now, this might look big on this image, but it might be a small time frame. The entry is here. That's where you enter to go short. Your stop loss goes here, T1, T2. Okay. So we're going to talk a little bit about this. Let's go through it. Here's a big one. This is a very deep correction. This is a reversal correction, continuation ratio with a reversal on projected D. This is the enter for the buy setup. Your stop loss goes here, T1, T2. Okay, does everybody start understanding that? The pattern is identified by the software. The trade plan is identified for us to trade it. Here's another example. This is a really deep environment. See, this is a reversal ratio. There's the base, leg 1, pullback 2, leg 3 to extension 4. The enter to go short is here, T1, T2. Okay. Take a look at this. These are really strong trades. These are trend trades. These are the zigzag ratios. Very powerful setup. Very powerful setup. You get zigzag to A, B, C correction with a really, really big impulse, and it's directionally traded. When we get these are really strong trades, guys. Very, very big trades. Same thing with this one. Really, really big trade. This is on a smaller time frame. But here's the key, right? I could show you picture after picture after picture after picture. Does everybody understand this? Because I want to show you some examples, but I want to go into the charts. Give me a yes if this kind of makes sense to you. Lots of different ratios. I just want to know, is everybody on the same page? Got a coffee? Everybody's good? Steven says good. MJ? Sandra? I mean, who we got in here? We got Adam, Adrian, Alan, Antonio, Anoop, Barbara, Banu, Bob. Hey, Bob. Bruce, Carlos, Dan. I'm going to... David. Hey, David. Got a bunch of Davids, so hey, all Davids. Don, Edward, Erwin, Fred, Jeff, Greg, Hardillo. Greg, Hardillo, Jack, Jeff, Jim, John, Jarrett, Larry, Mark. Hey, Mark, lots of Marks, Marky Mark, Mike. Lots of you guys here. I just want to welcome you guys here because I know that there's so many of you guys in here, and I know a bunch of you came in after we'd started, so I just want to welcome you guys in here. What we're going to do now is we're going to go into the plan, okay? So as I said at the beginning of these events, I personally don't like teaching educational events if I can't give you a strategy to leave here so that you can go and make money with it. I just don't like teaching that way. I'm an instructor that likes to give you an actionable trading plan so that you can leave here and you can trade it efficiently so that it's worthy of your time. So I want you to take a screenshot of this. Can everybody do that? Can you just take a screenshot or watch the webinar replay after and take a screenshot then? This is your roadmap. Step 1, step 2, step 3, step 4. What I'm going to do is I'm going to spend all of the time on step 4 today. Because step 1, step 2, and step 3 is all automated by the software. You don't have to do anything. It's a plug and play system. So step 4 is all about enhancing probability. Can we agree that that's the most important part? Give me a yes if you would agree that it's about making the wins better. Bigger trades, better trades, winning is the answer. Green on the screen is the model. The reason I'm saying this is because there's a few things that I've learned, little secret hacks as the architect of this and being the instructor of this and designing this that I've been able to see over the years of seeing where it really, really shines. And so if I can give you an A+ trade all the time, then all I want you to do is look for the A+ trades because there's going to be a lot of them. You just need to know what they're doing. Okay. So what I'd like to do first, I'd like to show you some real trades. So these were real trades taken in our trade room with real fills on the software. So, you know, this is a trade that I took. Okay. So I just like to show you that so you can see that this is not just some indicator that, you know, we're selling. Like these are trades that were taken. There's the fill, there's the targets, right? Here's another example here. Different trade setup. Okay. I just like to show some examples. I think it's important to show real examples of trade setups and that type of stuff. And I just think it goes a long way to show some execution. Here's a student, Gary, sent in one of his trades. You know, a little blurry because I had to blow it up, but you know, I just like to show you the fills. I just want to show you the fills. Those are real trades. You can see the arrows pointing to it. He's taken the entry on projected D, and you know, here's another example of Terry. Terry filmed this, took a screenshot of this. He's using other indicators, but he's got the ratios. Or you can see the ratio projected D, bought 2 contracts on the bottom. And I just want to show you that we got traders trading this and it's efficient. It's just what's really efficient, what's really efficient is the process. So what I want to do is I want to go in now and I want to teach you that process. And I'm going to ask you guys some questions because I want to know the audience a little better. Can you guys do me a favor and tell me if you're swing traders or day traders? I need to know the difference. because this is, or maybe you're both. You swing trading, day trading, futures, forex, or stocks. Tell me where you're at, who you are, and are you day trading? Thomas says day and swing. Steven says mostly swing. Usually swing, I want to learn how to day. Got swing, day, both. So I think it's a good combination of both, right? So what I've got here is I've got some scans, and it's interesting is that it doesn't matter which market you want. I'm gonna look at some swing trading examples first, and then we could go and load the day trading as well, and that sort of thing. But so what you've got here, and I'm just going to walk you through this, is I've got futures here, okay, I've got forex here, and I've got stocks down here. Now I could load cryptos in here, but you can't trade cryptos through Ninja, but they do have a database with Coinbase. Where you can actually, do all your charting. So you can apply cryptos on this, which would be very efficient, actually. In fact, I had a scanner here. Give me 1 second. Yeah, they work on all of it. Well, let's stick to this first, and I'll add the cryptos after. If you're a crypto trader, we'll do some cryptos at the end of the event. So let's talk a little bit about this. Okay, so right now, let's say I'm a 60-minute trader. Let's say I trade off the 60-minute chart. I want to swing trade the 60-minute chart. Okay, so I've got my scanner set up. So I got 60 minutes, 60 minutes. Well, if that's the case, if I'm a 60-minute trader, I like to teach people hacks, little hacks. So what I normally like to do is, like, number one is define the time frame. Okay, then 2, identify the opportunity. Okay, then 3 is assess the trade probability. And then number 4 is take the trade. So you notice I'm taking the trade as the last thing. So what I'm going to do is define the time frame. Let's say I wanted to do the 60-minute chart here for a second, okay? Well, I know for a fact that I have an opportunity on the NASDAQ right now on the 60-minute chart. We'll give it a second to load. There it is. Okay, so let's just talk about it. And it's a buy setup. It's green. So green, and it's very simple. Green is buy, red is sell. Green equals buy setup, and red equals sell setup, right? It's that simple. So right now I don't have any sell setups in here, which is fine. The mathematics is one thing. Like we can't produce trades that are not there mathematically. So right now we're only seeing buy setups on the scanners. When a sell setup happens, it'll come in the scanner, right? And you'll see these dots in here. It just means there's not enough data loaded in the scanner to load them. So what I'm going to do is I'm going to go in here. I'm going to try to add some days in here. Give me 1 second. Let's go in here to columns. Let's go in here and add some days. So we got 30 minutes. We got 180 days. We could just do, 360 days. Just adding some more days, 360, because these are swing trades, right? So just going into the scanners. So 365, let's go 500. Let's go 500. Maybe we want to go 500. Let's just see if we get a little bit more data in here. See if maybe there's a couple patterns on a few others. And the scanners are going to run. It's take a second, because it takes a second to run everything, and it's got to process all that information. We'll see how it loads, and we're loading a lot of days here, guys. Remember that we're loading 500 days, 700 days, 600 days, like lots of data coming in here. So you see the dot. So bear with it here as it loads. And once it loads, it'll populate all the different time frames, because it's scanning a lot right now, right? So that's the point. Once it populates, it loads the data historically, and it's just got to load that data historically. So while that's loading, let's take a look at this NASDAQ trade for a second. So remember what I said, step 4? Step 4 is about assessing the probability. Well, let's just assess this last trade here for a second, okay? And if we're going to assess this last trade, in order for me to want to take these trade setups, what I normally want to do is I want to add a 100 and a 200 EMA. And I just want you to do this, okay? And I've been having some issues with the data servers. I don't know what's going on with the data servers the last day or two, but we'll have to take a look here. So how can I assess the probability? So irregardless of time frame, I want you to put a 100 and 200 EMA on your chart. Okay, just everybody has it. It's a free indicator inside the platform. Okay, so what you're seeing here on the NASDAQ is I have, you see how the EMA's crossed right here? And you see how the EMA's crossed right here? What I'd be doing, okay, just to be very specific with you, okay, what I'd be doing, just be very, very specific, is I'd be only looking to go short ratios here, and I'd only be looking to go long ratios here. Okay, very, very simple. So what I'd be doing is if I was looking at, you know, these types of ratios, I'd only be looking. So if I'm looking at this ratio right here, okay, just kind of clarify this, is the 100, if the 100 is above, and this is just my own rules to kind of help you filter the trades. So if the 100 is greater than the 200 EMA, okay, only by ratios. Does everybody understand that? Very simple. If the 100 is less than the 200, only sell ratios. Okay. So right now we can see that the 100 is above the 200. The 1 is the red, the blue is the 2. So that means that if I had a short ratio on my scanner in here, I wouldn't want to sell it. Okay. I wouldn't want to sell it. I'd only want to buy it, which is why this became here. There was the pattern right here, and there was the projected D, and he came in for a second retest. See this box right here, this little highlighted box? That's kind of the entry box. It means you can enter the trade setup anywhere in that box, preferably closer to projected D. Okay, closer to projected D. So remember, this is a 60-minute chart. You got lots of time. So technically, you could enter this trade anywhere in this area in here. Now, for me personally, I don't like to do that. I'll just explain the way I, because you got lots of time. You got 60 minutes, 2 hours, right? What I like to do is I like to add an average range to the indicator chart. Just, and I'll tell you why. I just tell you why I like to do this, because the ATR is ultimately ATR. Where is it right here? If I add the ATR, okay, I know that if I'm looking at it from here and we're coming at it like this, boom, 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 software gives the pattern, boom. Okay, what's the ATR? 43 down here. You see it's 43 points or whatever. And this is a bigger trade example. It's a swing trade, right? So if I'm looking at this ratio, what I would want to do is I would say, okay, that's 43. The average range is 43. So let's just round that up to 44, right? Well, what's half of 44? And I'd say that's 21. So I'd want to basically put my my entry like 21 ticks above that level, because I want to go about half the ATR. So if and that's just me as a trader, like I'm trying to look for a mathematical way to kind of plan my trade setups and get into the way. So let me kind of explain this for you. So let's just go in here to the ruler. I'm going up here. That's 200. So that's 200. So 200 divided by 4. Give me a second here. 200 divided by 4, 50. So, you know, I could go down a little bit more. So let's say, so that's 22 points, just about there. Like I would say I'll probably get in like maybe about 22 times 4, that's 80. Yeah, probably just around there. I try to get in around that way. Or you could go like 40 points. You can even go 1 ATR. Like it's really about how much buffer you want to go from your entry line. It's a preference on where you enter, because a lot of traders will take a lot more risk, a little bit more risk. But realistically, if you've got 43 points, you could easily just do, you know, 2 times the ATR, 1 times the ATR, anywhere in that buffer you can enter, right? You could have entered here, you could have entered here. Either way, the point of the matter is that this is a long trade and it's almost hit targets. It's still in play. You'd still be in this trade right now because it's still a swing trade. Okay, let's see if this actually hit. See, this didn't really hit. The scans didn't really hit here. We go back and load the data. I've been having a little bit of an issue with the data, mainly because I think it's the weekend and something. They're probably resetting their servers. Let's see here. Let's try it again. Yeah, see, it was locked up. just having an issue on loading the data. We'll look at a different market because it seems like futures is having an issue loading the data. So we'll just look at, and that's a kinetic issue because of the weekend, I think. Let's go take a look at it. Let's say you want to trade off the 30-minute chart. Let's say you're a 30-minute chart trader. You're trading the 30-minute time frame, okay? And you wanted to basically trade the 30-minute chart. Well, there's only one ratio here. You see that? So what we're doing is we're saying, okay, perfect. We got a ratio here, but I got to change the time frame to 30. So change the time frame to 30. Give it a second to load. And then I'm going to load over to this market here. And see, there was another ratio there, but I wouldn't be taking the long because the Emas are on the wrong place. So let's take a look at this. Interesting. So if I was a 30-minute trader on the US Swiss franc, Swiss dollar, okay, we'll give it a second to load. Let me kind of explain a few things. Do you notice how we don't have any long ratios in this uptrend? It's all shorts. Look at how hard it would have been to short those ratios because you're just fighting the trend. You're just fighting the trend. But when you get a long ratio, this is where the sweet spot is, guys. If you're looking for money in the bank trades, like realistically, like if you're looking to stack all the freaking chips in your favor, how many of you guys like putting the odds on your side? Stack the deck, so to speak. Give me a yes if you're here to stack the deck, because I'm here to show you how to stack the deck. Like really, really, really high probability money making freaking gems, okay? Because that's really what it's about. I should only be turning off all the ratios. We're going to go here and show only long ratios. Recalculate. I just want to see the longs. Give it a second. I got very large lookbacks loaded because I have very, very large lookbacks. So let's just do this for a second. Let's go back and make it a little easier. 500 days. No wonder it's having a hard time loading. Sean, it's Saturday, guys. Give me a break, right? 180 days. There it is. So where did the Emas cross? This is the key here, guys. If we're just looking at long ratios, I just want to basically kind of go in and talk about where the Emas cross and we're in March. So let's just go back. The Emas cross right here. This is where the real power is, guys. So at that longs only, let's just put a little, okay, right here, longs only. Take a look at that trade. Like, this is what I'm trying to get at here is like, you should only be trading when the Emas and you get a ratio. Look at the size of that trade. Massive trades. When you're with the trend and the ratio gives it to you. Now, you're not going to get amazing amounts of them because these are big trades. But take a look here. You're gonna have them on 20 different markets. You don't need to worry about it producing. Take a look here. This is an amazing opportunity right here. This is a trade that's in play right now. And it's in an uptrend. So I would expect that they're going to come down to test this average in projected D and they're going to rally out of this level. This is a really strong opportunity on the US dollar right now because it's the markets are closed, but it's a trade that's in play right now. Okay. Let's go back and say you wanted to trade the 120 time frame. Let's go to the 120 chart. Let's turn off the plan for a second. Okay, we shouldn't be looking at any shorts. Like those shorts you would have got stopped out on the shorts. That's the whole point. You don't trade against the Emas. And that's what I want to do is I want to give you the stack the deck. Let's go in here and take a look at the 120 time frame. Okay, the 120 time frame is showing longs only, right, on this market, but we're going to go into the other market. We're going to go take a look at the euro dollar. Well, let me ask you a question. Am I allowed to trade? Am I allowed to trade longs right now? This is the question you should be asking. What is the EMA direction? What's the EMAs, up or down? Steve says down. Okay. Anybody else want a second? Steve, both Steven says down. You're correct, right? So if you're following what I was telling you, the EMAs are down. Should I only be looking for short ratios? Yes. Which means, yes, I'm getting a ratio, but it is not one that I would take the projected D here. The reason it's not telling me a short ratio here is it already hit targets. Do you see what happened on the short ratio? It just happened, actually. Take a look at it. This was the opportunity. There was projected D. You would have had the buffer box that would have been about here to here, right? So you could have entered the trade anywhere in here. and it already hit T1 and T2 on the short side. On the short side. Does everybody see that? So this is why I'm just letting you know that even though you're getting a long trade showing in the scanner right here, the better trade would have been to the short that already hit targets, because it would have hit the scanner before it hit the targets. Yeah, it was an amazing trade. Okay, it was an amazing trade. Okay, so that's why, and we wouldn't be taking any trades when the EMAs are flatlined. Never take trades when the EMAs are flatlined. You want to see direction. You need to see direction. Okay, it's very, very important. Let's take a look here at the pound dollar. All right, so are the EMAs in an uptrend or are they flatlined? You tell me. Are the EMAs in an uptrend, downtrend, or flatlined right now? Flat. So we should avoid all trades on them. Why? Because it's very hard to pick a direction. The last trade that had any solid direction was here. It came in, hit projected D, came almost to target, came back down again, didn't hit the stop, came all the way back up. It had 3 times in this resistance. I don't know if a trader would sit through that much longer if it didn't break through the range like that. Either way, if you got in here, your stop loss is here. It just didn't quite get there. But I mean, I don't know how long you're going to sit through a swing trade on a 120-minute chart. Most traders are going to probably book a little bit of profit on that because it gave multiple opportunities close to T1. That being said, right, I wouldn't be trading any of these setups in here on a flatline market because the market's consolidating, right? Does everybody understand that? You see where we're going with it? Okay, it's really that simple. It's really that simple. You just does it work with Forex because you don't have gaps? No, it has no bearing. Has no bearing on anything. I don't know. Let me take a look at the 30-minute chart. Let's go take a look at the 30-minute chart. And we're going to go to the QQQs. So tell me this, the Qs, is it in an uptrend or a downtrend on the EMAs? Should I be looking at buy ratios or sell ratios? Exactly. So should I be buying that pattern? Came close to target, but based off what I've been teaching you right here, should we be buying it? No, Thomas, don't break the rules. It's a swing trade. No, exactly. Just because you have a pattern doesn't mean you should trade it. Let's take a look at silver. Let's go to the 60-minute chart. Real simple. This is swing trades. We'll take a look at day trades after. Okay. Silver. Now, silver is a really hard market on an ETF. Like it's a very, very, you see the gaps. It's a very, I don't personally trade markets like that because it's very unpredictable. Like if you see the gappy markets, I wouldn't encourage anybody to trade any stocks that have major, major gaps like that. I try to trade more liquid, like more like the spiders, you know, that type of stuff. That being said, you know, this is a pattern that is in an uptrend. I'd only be looking at going long the markets. And this one would have been a stop. Realistically, this one would have been a stop. But I don't personally like to trade any markets at gap like that because it's very unpredictable, right? Very unpredictable. I really wish this scanner would actually load back up so we can go take a look at the futures. But either way, guys, take a look here, 180. 180. Let's take a look here at 300. Take a look here at 300. We'll try it. Give it a chance here. I think it's just having a little issues with the data. So he says he's saying loading, calculating. I think that it's just taking a bit of time. Can you use Freak Mark as what are the optimal time frames? Yeah, so I normally don't like to go less than the 5 minute. I normally don't like to go less than the 5 minute. It becomes very hyper scalping. Let's close this out on the swing trade for a second. Let's close this out on the swing trade. So I'm going to leave this here for you guys to take a look at for a second. We'll just do this. So the same holds true. The same holds true. So I'm just going to repair the database for a second because I think Kinetics having issues with their server. You can backtest it as many days as you want, Sandra, to basically go and take a look at all the data because you can load the data. Just give me 1 second. I'm going to disconnect the data. And I appreciate your patience, guys. I never, ever expect the data to have that type of an issue, but we'll reset the database. Okay, and repair the database. There it is. And done dinner. I'm just going to restart Ninja just because sometimes on the weekend when they reset the servers, I don't know why. Don't know why, but it's just the way the cookie crumbles sometimes that they just lock up the data. So I'll load it again. While we're loading Ninja and we're doing this, how many of you guys think that's kind of useful? You let the scanners find the opportunities, and all you do is check the direction. Like, you don't even need to do anything other than check the direction. Like, it's that freaking simple. That's why I love it so much. And as a swing trader, it's so powerful because you're not really getting a whole lot of trades every single day. You're letting this, you can set an alert in the scanner, ding dong, right? Oh, you're sitting there having dinner, and all of a sudden the Forex gets a setup, or futures in the overnight triggers something, or whatever the case may be, because you can do that with this. And that's what's fun about it as a day trader. Now, let me kind of explain a little bit on the day trader side of things, okay? We're going to go in here and we're going to talk a little bit about frequencies on the day. Now, this is going to pull a little bit more PC resources, so I'll give it a second to load. How many of you guys have ever looked at pattern trading before? Can you guys give me a yes, no, maybe so? See, it's loading all the scans, it's loading everything up. Mark has, right? We'll give it a second. It's got a lot of processing because I'm loading a really big master workspace. I really don't encourage everybody to run so much. Like, I'm pulling Forex, futures, stocks, cryptos, everything, right? Like, and I don't know if the data server is going to give me an issue here or not, but we'll see. Patience, patience, patience. And normally what we can do is, we can just go take a look at some of the other ones here. We'll just go take a look at the ones that are loading. You see how much data's got to load through all of this, so we'll be patient. So let's go take a look at the, let's go take a look at the pound. Let's look at the 5-minute and the 3-minute chart. Normally what I want to do is I want to set the Emas. So we're going to go in and we're going to just take the Emas. Okay, go like this. Going to add a couple Emas to the chart. You're going to set it to like a 100 period. And I'll just change the color so that you can, we can, and let's go here, put the next EMA, just put it to a 200. I just do this because it's macro trends, right? It's macro trends. That's all I care about is macro trends, right? Yes, Spencer, you can import the stock symbols into Ninja. Absolutely. It's part of the database features. And then will you have these templates as shown today posted? Yeah, they're actually in the members area already. Yeah, it's part of the master workspaces everybody gets. I encourage you to build your own scanners too on the markets you want. But I think I'm having a kinetic issue for whatever reason. They could be setting because I'm not loading enough data. Let's go in here and take a look here. Patience, traders, patience. 5 days. So I'll just load in 5 days. Yeah, so I think it's just giving me, I'm having a data issue, which is fine. We'll go in and take a look at this one here. Trade setup on the 5-minute chart. You're going to have a whole lot more ratios in here because you're looking at much smaller time frames. So that's why I always encourage traders not to go down too far. But what I will tell you right now is that if I know that I'm only allowed to be looking at longs, right? I should only be looking at long setups. Then ultimately I would look at turning all the shorts off, right? If I'm looking at, this 3-minute on the YM, so take a look at the YM on the 3-minute. Let's go to the 3-minute for a second. Okay, so realistically, what we'd want to be doing in here is we'd want to be looking for shorts on the downside. So what I'd be waiting for is I'd be waiting for a short. I would not be trying to buy any of these patterns as a scalper. And I personally, I like to do the 5-minute charts. I like to do the 5-minute. Anything less than that's a little bit aggressive because you get a whole lot more noise. No, Thomas, you could use continuous contracts if you choose. Now here's my thoughts. Okay, guys, like I'm a firm believer. Let's take a look here and see if it's going to give me anything of a data issue in kinetic end today. I'll have to get in touch with kinetic. 5 minutes is my baseline. I won't go anything less than 5 minutes. So let's just go. I think it might just be this the scanner data. So let's take a look here. If I'm in an uptrend, should I be looking at this one? No. Let's go down the next one. I'm just going to load the 5-minute because I don't like to go down less than the 5-minute, and we'll just keep it here. Okay, so let's go down each market, a YM. No shorts. Let's go to the Russell. I should only be looking at longs right now because the EMA's just crossed. So if I get another pattern, I'd only go to looking at the longs. NASDAQ. Okay, I should only be looking at shorts right now. So if the market gives me a short ratio, shorts. Gold. Here's a big one. Massive trade on gold that just took place. I'm going to turn this off here, guys. Shorts turning off. Recalculate the ratios. So where did the Emas cross? This is so powerful as a day trader. Take a look at this huge trade that just took place. Oh, wrong one. Massive one right here. Take a look at this trade right here. So this is a great example. We got 2 trades that hit out. This was the entry area right here. Okay, massive trade on gold. Because it's the EMAs that tell me which ratio I'd be looking at it. You can use it with any chart, MJ. You could use it with tick charts, volume charts, range charts, Renko charts. If you had a butterfly chart, if you had a rose petal chart, I mean, as long as Ninja has it, you're good to go, right? And because the software is measuring structure, measuring mathematical structure. So what's going to happen here is, this is the last trade on gold that just hit. And when we're crossing down like this and we're crossing in here, I would not be looking to engage in trades. Like even if you took this trade right here on the long, and then you're in that trade right there, and you're seeing that these EMAs are crossing, I'd be bailing on that trade because I don't want to be trying to fight against the big macro. Okay, that type of thing. So let's go in here and take a look at turning these back on. I just like showing real examples with stuff that's in play now, and take a look at the S&P. Only looking at shorts. I should only be looking to short. No shorts there. Crude oil. I should be looking at longs now because we've crossed. So if crude gave me a long opportunity, Ed, I normally look at like you don't really need to have more days back. Like I have like 15 days, not even. You could load 5 days because it's not loading tick data. It's loading no tick data. It's loading minute data. It's not an issue. Euro. So I should be looking at shorts. There is no shorts. Let's move down the Aussie dollar. So this is a huge short on the Aussie dollar. Let me just show you this. Huge short. Take a look at this right here. Short ratios, long off. Look at that short. Massive short. This is what I'm talking about. Like all you need to do is just know the direction and wait for it. Massive short. See it? Let's go down to the Euro Swiss. Should only be looking to go long. No long patterns here. Actually, I have the longs turned off, so let's go and turn them on. Wow, look at that one. Where did the EMA cross? Geez, Sean, get it together, bud. It's that simple. Like that's why I love this event. Out of all my webinars, this is one of the favorite ones I like to do because I like keeping it simple for big trades. Math-based, simple trades. Like it's that simple. Automatic frequency ratios find the patterns. All you need to do, can everybody promise me something that they'll add the EMAs to their bloody charts? Please tell me that you'll add the EMAs to your charts. Everybody give me a yes that you'll put the EMAs on your damn charts. Because if you put the EMAs on your charts, it keeps you on the right side of the automation. Keeps you on the right side of the automation. Okay, it's all I care about is making sure that you pass the probability test. Okay, look at that trade. That was a huge trade. Right down to the key. Boom. See, big trade. Let's go down to the next one. Pound. Okay, we're only looking for longs. So when we get an opportunity, we'll go for it. Only looking for shorts. This one would have given you a stop loss. Yeah, you would have been stopped. Hey, it's going to happen once in a while, guys. I'm not here to try to cherry pick. Okay, 100 and 200, Paul. Only looking for shorts. And if you take a look at this one actually hit the target. So take a look at this one down here. It came right there, hit projected D. This was a very nice scalp. Wasn't really a big scalp, but there was projected D. Okay. And it came right down and hit the target. Now I have the longs on, I can turn it off, but I just want to show you that that hit the target. Didn't look like it, but it did before it squeezed up. So hit target on that one. Now I'd only be looking to go short again if I had it. Let's go to the pound dollar. So this, I wouldn't trade anything in the flat line. I wouldn't trade anything in the flat line until it broke the range. So even though there's a lot of stuff going on in here, when the EMAs are flat, I wouldn't have taken that short, even though it hit the targets, massive targets. I wouldn't have taken that short if I was trading. No sense on that, guys. It's when the EMAs are flat, you don't touch it. US CAD, only looking to go long. That short would have got you stopped out. You see that? We don't trade against the EMAs. Big trade on the Swiss right now. We're waiting for that. Where I was telling you, there's a big trade opportunity on the Swiss franc to go long right now. US dollar. So right now, EMAs are flat. I wouldn't touch it. And this long, even though it hit targets, multiple targets, I still wouldn't have traded it because it goes against the rules, right? Well, the 100 and the 200 averages are looked at by bigger banks with bigger size, TJ. I just normally like to use macro trend averages to keep you on the right side of it, right? So, you know, and I could do this. Let's just disconnect from here. Let's connect to Coinbase. See if I got any cryptos loading in here. Let's take a look here. I don't even know. It's I'm just gonna try to take a look at some cryptos. There's some, we'll wait for it to load. I don't know if you guys trade cryptos, even if you're using TradingView for execution, right? If you're loading cryptos or Coinbase or anything, you want to use Ninja, let's take a look at Bitcoin Euro. Let's take a look. So look at, you could look at, like, there's the Bitcoin Euro. I would not be looking to short that. Bitcoin dollar. So this came right down into projected D, a little bit of a flat line, but take a look at the Ethereum dollar. So I wouldn't be looking to go short this, but I would have been looking to go long them. So take a look at these. So if you're looking to trade cryptos, guys, this is really good for you guys looking to trade cryptos on other platforms. This is really powerful, actually. Let's take a look at the shorts, take them off. So I'm only looking to go long. Where's the long ratios? So take a look at this. Long ratio came in here. You might have missed that one, but you would have got this one. Big trades. Big trades. As a day trader, that's a big trade. You know? Yeah. Is it possible to run a 12-month back toss on taking every trade in a particular time frame? Spencer, yeah, if you have the time to do it, brother, like, be my guest. I would love for someone to do a 12-month back testing. You know, if you do that and you perform me the results of your back test, I will find some way to recoup your, I will help you out, brother. You do that, and I'd love that. Because I've gotten too old in my days. I'm not even old, but I've gotten too much time behind me to not, I don't have that much time, but no, they're not, Thomas. No, they're not. But this is an indicator instead of a strategy. So that, yeah, it's not to me, it's, you would have to do it manually. Yeah, that's why you would have to do it manually. But, you know, even if you wanted to go back visually over the past several months, you could do that because it's easy to load the data. Several months is enough backtesting data for you to be able to see. Even a year of data is enough. Ethereum dollar. So take a look. There's the Ethereum dollar. Let's take a look at Litecoin against the euro. You know, let's take a look at looking to go long. There wasn't any longs here. Take a look here. Litecoin against the dollar here. Ripple against the euro. Ripple's got no data, and Ripple against the dollar got no data on the Ripple. So maybe they dropped coverage on it. Oh yeah, I think that's because Ripple had some issues with their platform, their coin. But you guys get the picture, eh? So how many of you guys enjoyed that? You know, I'm all about keeping it simple in this event. Super simple system, super simple software. It's 100% automated. All you need to do is load the scanners, load the charts, pick your time frames, pick your charts, and then let the software do its work. The only thing you need to do is put the damn Emas on your chart. Okay, and then trade the setups. Okay, start in sim first. Okay, start in sim first, and then go live when you're ready. If you want to do some visual back testing, you can. It's got no tick data loaded, so it's super fast, super efficient, and you can do this on Ninja, and you can basically automate the entire process, okay? And the scanners will find all the opportunities for you. I'm assuming you guys won't have any data issues because it's me. It's just my data feed on a Saturday, but I didn't have any issue yesterday when I loaded it, So if you have any questions for any of our students, we've got several hundred reviews. If you're new in here and you've never heard of NeuroStreet and you're just wondering, hey, who are these guys? You know, You know, this is the first time being an event in here. We've got an excellent rating, over several hundred reviews, and we just keep getting them in all the time. So that's great. Thank you for those of you that did write reviews. One of the things you'll have access to in our company using our tools is the Discord trading rooms. So we have Discord chat rooms that traders post their trades. We've got indicator threads on software. We've got everything. So anybody that's in our company gets access to the threads. All you need to do is be a part of our programs in one of our packages, and this will give you the opportunity to come in if you're new. And for us, what's really different, I just like to share this with all of you guys, is that we've moved to what we call a Netflix model, and we have an all-inclusive environment. So when you're in, you're in. That means you have all the education courses, all the strategy courses. You get access to all of our live trading rooms and all of our software. So let me give you a perspective. There's a lot of companies out there that'll sell you one indicator or sell you a trading room, and then you got to buy this and you got to buy that. We don't do that here. When you're in, you have everything. So not only would you have access to the software we talked about today, but you would have access to all of our trading rooms and all of the other 40 indicators in our company. So can you imagine this? If let's say you paid for dinner one night at a restaurant, but you could go back for the next 30 days and eat anytime you want and eat all the food you want and everything, you just, as long as you bought dinner once, right? That's the way that we look at this. And we've made this so that we empower the traders. It's a one size fits all model. And it really is there for you to save money and have all the resources at your disposal. Okay. So remember at the beginning of the event, anybody who in here likes The Godfather? And I always use this slide because I like stories. I'm a big story guy. How many of you guys have heard of The Godfather before? Give me a yes if you've heard of Al Pacino or Vito Corleone. You guys heard it before? If you haven't, well, I'll give you my logins. You can go watch Netflix, right? I'm going to make you an offer you can't refuse. And when I mean offer you can't refuse, I'm about ready to shift the Titanic plates here, okay? And I mean that. So you're going to have to make a decision quick or it ain't going to be there, okay? So what I'm going to do is I'm going to explain what we normally charge for our packages in the school. And then if you want to do what we're doing and you want to use the software today that we're talking about, then I'm going to give you a discount that you're not going to want to refuse. And I mean that with 100% certainty, okay? So NeuroStreet has 3 packages. That's it. There's no buy an indicator. There's no rent a trading room. You get all of our indicators and all of our trading rooms. So can you imagine this? Like you use an indicator and you get access to all the trading rooms and all of the courses and all of the workspaces and all of the templates and all of the everything. Okay. And there's 2 ways to be a part of our school: on a monthly subscription or an annual subscription. And if you go annual, you get 2 months free. But here's the thing. I'm not going to do that. If you want to come in and you want to use the tools and you want to come in and you want to test the drive, like you want to test drive the software, test drive the trade rooms, come in and just kind of, I want to check out what these NeuroStreet guys are all about. Then what I'm going to do is I'm going to give you an offer for the first month that's going to rock the Titanic shifting plates, right? The offer that sinks the Titanic, so to speak. Okay. And it's the gold package. In order to use the software, any of our software events, you need the gold package. So it's only this, because it's all our software and it's all of the trade rooms. Okay. And so what's going to be really important is you don't pass this one up, guys. $25, less than a movie night. Can you guys afford popcorn and a ticket to go see, Men in Black? Or, the way I look at this is it's a no-brainer. It's an offer that you'd have to be batshit crazy not to jump on that, right? Because the way I look at this is it's less than a movie, and we can give you a career using the software I just showed you about. You could take one trade a month and it pays for the entire program. Now, when it renews, we'll send you an email and you can choose to renew your subscription, and we'll give you a discount on the renewal. So don't have to worry about renewing at full price. We always give a discount on the renewal as well. Bear with me, guys. I got a little puppy here and he's barking. He wants to come out. But we'll give you a discount on the renewal, guys, and you'll be able to do that. So give me 1 second, guys. I'm just going to let my puppy out. And this is for those of you that are, you never been in here, you're not a member of our school, and you want to come in and you get stuff out. How many of you guys think that's a pretty damn good offer? I'd like to think so. I'm going to give you a link here, guys. It's less than a movie ticket, right? Yeah, it's crazy, absolutely crazy. Here's the link. Okay, the offer expires Sunday. Okay, the offer expires Sunday, and this is an awesome offer. MJ says, yeah. Well, we want to get you in and using the tools and being comfortable in our classrooms and stuff, because you got to remember, like, a lot of you may or may not know what some of these tools do and the power behind them, and might not even know what it's like to be in our trading rooms. And a lot of you guys are in the due diligence process, going out there and, oh my God, I don't know where I should trust these guys and that guys, and I want to, I'm going to open up the time for Q&A now and all that stuff, and bear with me here, guys. Yeah, absolutely. You can come in at 25, and if you like what you see, you can stay. Absolutely. So what I'm going to do, guys, I'm going to run a poll, and it's going to. So give me 1 second as I give you guys this. And this is where you guys can type your questions. You can take the link, take advantage of that. So what I'm going to do is I'm going to put a poll in here so that I can kind of better help you guys. And so just for those of you that are here, and you can see this poll, it says, I'm in, sign me up. So basically, for those of you that are planning on joining us with this, just put yes. For those of you that are not, put no. And if for those of you that would need to speak to somebody and you have questions, and you know what I mean? Because here's the thing, right? Like, for less than movie tickets, we can give you a career, and then you can join our classes and join and see what we're doing and be a part of this. And I truly, truly think that, even if you're struggling right now as a trader and you want to learn all the other things that we're doing, you could easily take this in the first month and swing it out of the parks, and then get an opportunity to see what everything else is. Like, it's just a win-win. It's a huge win. Steve, I'm gonna just open the chat box here. Do me a favor, and oh, I didn't put the link in the chat box. Give me 1 second here, guys. Didn't post it to everybody. Can everybody see the link? There it is. So what I'm going to do here is I'm just going to open up the chat box. Do me a favor, and if you just do me a favor and just put all panelists and attendees. If anybody in here has had a good experience with NeuroStreet to help the new guys out, just put their comments in here. Yes, no, maybe so. Like, where are you guys at, right? Because the main objective here is to help the new guy. I remember what it was like to be new, and So what I'm going to do is I'm going to also open up the guarantee that we have, because for those of you that are still not blown away by the movie ticket offer, if you're not surpassed by our expectations, or at any time you have, if you're not happy, or you're not 100%, 100% satisfied, you do not have to stay. There's no contracts, there is no commitments, there is no locked in policies, nothing. So the main objective here is you know, love us or leave us, right? You know, you're in the right hands. And I really think that it's a win-win. So this is it, guys. It's a Saturday. I'm going to take my time and go and rest and relax and do a little bit of grocery shopping and get some things done around the house and just enjoy the weekend. And I hope you guys had a great event. I'm going to put I'm going to put the link in the chat box again here, guys. For those of you that said you would like for us to contact you, then yes, we will do that. We will definitely get you up and running and all that. And oh, yes. Stephen, are you feeling better, brother? Hopefully you're feeling better. Did you get my message about rebooking the time? Thought you had some COVID at first. Glad you don't. I'm glad you don't. Excellent, guys. Sweat it over for us. Perfect. Yeah, book some time with me. That'd be great. We can go over that application and get things done, guys, and that'd be great. Looking forward to it, Steve. Hope you got the email. All right, guys. So for those of you that requested contacts on the polls, fantastic. We'll send that out to you. Take this link, guys. This is the discount link for you guys to take advantage of it. And I look forward to seeing you guys in the classrooms. I look forward to hearing about your success with us, getting you in the Discord rooms. Hope you guys enjoyed the event. I did. And have a great weekend, traders. Thanks for being here. And we'll shoot the recording out with the email after everything's finished and rendered up. Take care, traders. And we'll see you guys next week.